proverb, I am because we are, is the foundation of the Acbn YouTube channel. Tap in for all of our remarkable content and ecosystem mobilization through the phenomenal practitioners and thought leaders we engage on this channel. In the words of Adrienne Marie Brown, things are not getting worse, they are getting
Absolutely, my friend, and we have to be at the table. When you mentioned Brother Isaac and a few others, if we're not at the table, we're on the menu. That's one of the oldest proverbs in many communities. And if you look at the Bretton Woods Conference, if you look at the Berlin Conference, these two conferences literally changed the state of the world. The Bretton Woods Conference tied all monetary policy to the dollar and really eliminated the ability of the global South to even sustain itself, and the Berlin Conference partitioned all of Africa. And to this very day, we have extractive models that are really holding. So I'm saying all to say that we have to find ways and means to make sure we're at the tables and to take in what's boring. The one last thing that I'll mention quickly is we had a panel a couple of days ago on climate finance and credit unions. So we spoke specifically about something called the Institutional Investors Group on Climate Change. Who's heard of the IIGCC? Raise your hand. So I'm just doing a poll, and this is the fifth session. Okay, we have one person out of 43. Oh, two people. Incredible. So the Institutional Investor Group on Climate Change is a European membership body for investor collaboration on climate change and the voice of investors taking action on low carbon futures. 230 members, $30 trillion in assets, primarily pension funds. The reason why I bring that up is imagine that $90 million that was lost in Ontario, and what that could have been, what those resources could have been done in the hands of Wes and the work that Smith is doing, or in the hands of Brian or others, or FACE or FFBC or Adam. So I'm saying all this to say that we have to be at tables, we have to study, and there's nothing in this conversation that's boring, at least not to me. I don't think anyone here on a Saturday would log in if anything here was boring. So I'm gonna go back to you, Smitha, specifically in your role at Wes, primarily around just international work. The first time we met, you were actually logging in from Washington, DC. And I was so excited because I was saying, wow, there's an international organization that cares about the work that SETSI's doing. A small nonprofit organization that's scaling exponentially based off of a diligent team, but the fact remained you cared, we mattered. You saw us and you heard us. So in terms of your work, what are some of the emerging trends in the impact investing ecosystem internationally that you love to amplify or just share?
Sure. Thanks so much, Victor. I'm very fired up from this conversation to start my morning. I'm calling in from Washington, D.C., like you said. So Wes is headquartered in New York and Toronto. Our team is across just remotely. You work where you want. And so, you know, when I think about some of the comments that that Brian specifically was making, I just reflect on why I am at Wes. And a lot of it was reflections out of 2020, really wanting to center equity and justice in my work. And I had spent my career in kind of asset manager roles, deploying capital from that perspective. And I was thinking about how can I get closer to the money to go into what you could consider an asset owner, asset allocator role. And just thinking about, again, some of the power dynamics that are embedded in our system, where when you're closer to the money, you may be able to influence who has the money or how the money is spent. And so I think a lot about how we can change the face of finance, and that's, you know, people in positions like myself and foundations or family offices, but also, you know, across the whole system. And so I just really want to echo Brian and Victor, your comments there around how can we start shifting the face of finance. I think, Delisa, your work is so important in that, and I look forward to working with you on that. So I think, in addition to the who, we think a lot about the what and the how. And so in regards to the what, where we're focused at Wes is supporting 4 themes, trying to advance opportunity, wealth, power, and particularly to advance the social and economic mobility for immigrants, refugees, and communities of color, given how Wes as a social enterprise has made its money. And so, Victor, to your point, the ethos of SETSI and the research that you're doing around understanding the experience of particularly African fund managers, I think that was just really, African Canadian fund managers was just really important to understand that context and uplift that perspective so that we can have a little bit more nuance and understanding of the challenges to then customize potential approaches. And so I think there's just so much alignment there. I think when I compare the US context to the Canadian context, often, especially in conversations with many of you on this call, reflections are that Canada compared to the US is significantly smaller in regards to its impact investment market, more nascent, and in some ways really hasn't gone through too much of a process to center equity and justice. I think there, of course, was the racial reckoning that happened a few years ago in the US, which brought equity and justice to the center, though in some cases more nominally than truly. I think time will tell if it sticks, but I'm generally an optimist, so hopeful, at least we're having these conversations. And I think in Canada, often the role that we're trying to play is infrastructure building and supporting organizations like yours, like SVX, like New Power Labs, and really trying to understand how can we center equity in our work and thinking about that in a really comprehensive way, like Jaleesa was sharing. And so that's the work that we do in regards to the what, but in regards to the how, we're really focused on not just how WES operates, but also the organizations that we support. And that's where, again, we're trying to think about shifting power in addition to capital. And so we've internally done some rethinking. Building up the practice at WES from scratch has given us the opportunity to not do things simply the way that they've been done, but rather kind of asking that fundamental question of why are we structuring it this way? So for example, we have shifted all asset allocation decisions from board to staff and are moving that even further. So all grants and impact investments can not only be approved by staff, but also we're shifting that to community leaders in the way that we design our own governance at WES, which I think has been pretty transformative. And also we're in the organizations that we're supporting. For example, we worked with Common Future, which is a think and do tank in the US, and working with them to create a participatory investing action lab. Would love to bring this concept to Canada. I think a lot of the learnings are already there, what you and Adam were sharing on place-based and community-led investments. But how do we really think about a participatory approach to not only think about shifting decision-making power of where capital is going, but across the whole process of investments, whether it's the beginning, developing a strategy direction, or through the curation of opportunities. I think oftentimes as an investor, the role is really curation. So it's maybe not enough to say, for my role to say, here's 5 opportunities, community, please choose one, because that really already filters significantly and has a really strong bias and perspective. So we're really thinking about like across the whole process of capital facilitation, what is WES's role and what is community's role? And I think that's a really important question, because just because you're doing something community-led or participatory doesn't mean you're shifting power, but you're not shifting responsibility. There's certainly responsibility for WES to continue to support the process and think critically about our role. So I think that's another nuance I wanted to bring here. I didn't really answer your question about broader international trends, but I did want to kind of uplift some of the thinking that we're doing. And frankly, we're really just in it. Started this work just 2 years ago at WES, and just humbly learning as we go and really trying to learn alongside all of you.
Well, you got to plug Rodney and the team over there at Common Future. So
Big fan.
Incredible. I love Common Future and their work. It reminds me a lot of the work that our colleague Indra Sandru at Second Muse is doing. And funny enough, we do have royalty in the space, Melissa Allen from the Legal Innovators. That's a perfect segue to my next question to you, Jeff, which is around the supply and demand side. So we've seen the success of the Quebec ecosystem primarily because the demand side of the capital was able to harmonize with the supply side. And a lot of times, as we've mentioned, the capital side is dictating the terms, conditions, which is very problematic for communities and doesn't really solve problems. In terms of Raven's capital raises and some of the work you've been doing with entrepreneurs like Cheekbone and others, how has the demand side informed almost your investment thesis?
Yeah, great question. And of course, I would say it's evolved So Raven really got going in 2018 and did the first closing of the first fund in May of 2019. And what's interesting is that our first target was to raise a $5 million fund. I kind of look back at it with, let's do 5 million to prove is interested, and then that the deal pipeline really exists in a robust way. Because you're not quite sure when you first go. You actually have to get to market and really see where the deal pipeline comes from and what you need to do that. And I think what I would say is in the beginning, probably through 2019 into mid 2020, all that deal flow, all the demand side was outbound from Raven. By the time we got to 2020, and I could say today, we're probably 95% that deal flow is inbound. Now that's a really important statistic when you're looking at what happens in community when community can see a fund that looks and thinks like they do and is willing to be patient, flexible, and understand that sort of nuanced situation that's going on the ground. And then you can start to kind of modify your investment practice to try to meet the reality, in our case, of Indigenous founders, where they're at and where they're coming from. It does take a little more time. It is more hands-on, and it does require, I guess, education with founders. My experience with entrepreneurs is they're extremely good at that thing that they're doing, building this widget, providing this service, but maybe they don't know how to do cap tables and understand the impacts of what that does to their business at different rounds of investing, et cetera, et cetera. I'm sure Brian and others and Smith can speak to it as well. So that was Fund 1, just to bring this story full circle. We got a bunch of phone calls from larger investors. So the first fund was where you normally start, I think, is high net worth individuals, foundations who are mission and values aligned. They're coming in for smaller ticket size as LP investors. That started to change as we got more into Fund 1 to larger capital and some institutional capital. And we can talk about the reasons why that may have changed during that period. I think there's a lot of things that happened. So Fund 1 closed at 25 million. So we had a target of 5 and closed at 25. And I don't necessarily think it's our brilliance. I think it's a sign of what's going on in the communities and in the ecosystem, and sort of harnessing that energy that's at the community level to have entrepreneurial innovation, and really this pivot from surviving for Indigenous people to thriving, and what that means over time. The second fund, which I haven't spoken about here, which we started raising in February of this year, anticipated with the target, I'll call it a soft target of 75 million. Based on what we see for the demand side in the ecosystem. And for Fund 1, we were 20% across the medicine line in the US. And I can tell you that it's a slightly different environment than Indigenous investing in Canada. I can tell you today that I think we'll be closing that fund in 3 weeks, around December 9th, whenever December 9th is our final close date. I suspect it'll be about 100 million, our hard cap. So that's another good sign about what's going on. And it'll be 40 to 45% invested in the United States. And what we're seeing is slightly larger ticket sizes, so a little bit bigger businesses coming forward. So again, on the demand side, really interesting. And in the United States, because the market is different, they're bigger in the United States by and large. Like if I can make a broad brush statement, they're slightly larger in the US because the economies are slightly larger, frankly. On the supply side of this, from capital providers into us, it has moved into large institutional investors, which is really fascinating to me, from Europe, the United States, and Canada. So we have a couple of European investors now. And I think it is, what you're catching is an international trend towards placing capital in a place where you do get a social impact or an impact first lens on larger institutional capital. And they realize maybe some of those reasons are not so altruistic, but they realize that, you know, they do want money to look and act differently, and they'll be held to account by both their shareholders, stakeholders, and, you know, broadly by the public about how money is being used. And it gets exposed in all kinds of different ways nowadays. And I think there's a lens on what large asset holders are able and trying to do. You know, when you have the BlackRocks of the world creating a, you know, $1 billion alternative investment fund, and they come knocking at Raven's door, which was really weird, by the way, for me. Hey, we'd like to co-invest. You know, maybe that's a good thing. My response is maybe I wouldn't want them as an LP, but maybe that's a good thing. You know, I don't want BlackRock's army of lawyers banging on Raven's door. That's not fun. But if they want to co-invest and learn, and I think here's the important pivot point, is intermediaries from the community that you're trying to serve are really, really important. They hold all the relationships. They do all the hard work of investing, and they're critical in the space. And this is the role the government and others can play, is helping to build and nourish intermediaries like yourselves at SETC and other places that can do this sort of work. I'm disturbingly off topic, but anyways, you know, what we're talking about is supply and demand side of things, and these are some of the trends that are going on. And my instinct is we could probably have closed a $150 million fund, but we're choosing not to do it because of the nature of the demand side isn't quite there yet. But I bet you in next round, you know, if we were to do a third fund, there would be. I don't think we would do a third larger fund because it actually doesn't make sense. It makes sense to do more specialized things like an indigenous clean tech fund or an indigenous health tech. You know, you could specialize and do better things it doesn't have to be huge in order to get it done. And, you know, in particular in you know, if I get the podium, I'm going to say that I think the outcomes finance space has brought large institutional investors into our wheelhouse, which I did not expect, which I'm super excited by, because I think it has, you know, impact investing is great. I mean, VC investing is great for impact. Outcomes investing is huge impacts. You start saving lives and doing things like that. It's a whole different kettle of fish. Maybe not as financially rewarding, but more personally rewarding. You know, let me know if I even came close to answering the question, Victor.
You did more than that. You built everyone's capacity and edified us. And my grandmother died of diabetes. So when we began partnering and talking about the work, specifically around the health piece, around type 2 diabetes in indigenous communities, that struck a chord with me directly. And all the technical assistance and even some of the vulnerable and transparency that you provide in this conversation, once again, speaks to how grounded and centered you are in community. Because a lot of folks in your position, they keep their cards close to chest, and you've never been that way in terms of support and leadership and guidance. So I honor you, my friend. Thank you. I really appreciate you. So my last question, because I know there's a few folks that are in the chat and there's some questions. My last question to all of you is, do you have a call to action to the impact investing ecosystem? And I'm going to start, I'll start with Jaleesa, then we'll go to Adam. Yeah, so I'll start with Jaleesa because I want to make sure that we're on time. We close on time. We started on time. We're going to close on time. So is there a call to action for the impact investing ecosystem in Canada, Jaleesa?
Yes. So the call to action from me would be to, you know, include the communities that we are desiring to change as a part of the design. Include them, because there's really no sense in saying that we're working towards supporting communities and we have no idea what these communities need. And I think that we've spent far too much time assuming that we think we know what those communities need. But, you know, it's time for us to not only, you know, pull together 100 focus groups and then not do anything with that information. No, include the communities. Not only don't just pick the reins, don't just ask the questions, include the communities as a part of the action that we're trying to create.
Asheo, thank you, my sister. I appreciate your leadership. We're going to go to Robin. Is there a call to action you have to the ecosystem or to your colleagues or panelists or to community?
I guess it's, continue to share, to continue to create things like this. What we thrive on in terms of policymaking, and Adam spoke to, there are other actions of government, but we should never be doing that sort of work without the information, the data, the relationships that get built in an open and transparent way with community, with intermediaries, with folks like you. So we're not advocates, we're within an institution, but we need the voices of the advocates that are outside, and we need to open relationships. And so the call to action is continue to tell us what we need to do, continue to be open to how inept, I don't want to call us inept. It's just that there are things we don't know, and we have to continue to be honest about the things we don't know, but we're and you will continue to keep telling us maybe over and over again what needs to be done. And then I guess hold us accountable to making sure that we're listening. So that call to action is to be willing to help us and hold us accountable for being there and present and accounted for helping you.
Ashe, thank you so much. We appreciate that. Smitha, we're gonna go to you next. Call to action.
Sure. Well, thank you again, Victor, for the invitation. This has been a really enriching conversation and energizing. I would say I wouldn't be me if I didn't talk about governance. So I think I would just say, let's really think about the how. I think we've started to develop impact investing still in the same construct of the way investing has been done traditionally. And so let's really think about the structures that we're doing, equity, debt, ownership models, right? There's a lot of ways that we can just rethink the how of investing. And so if anyone wants to talk about governance, this is what really fires me up every day, and really thinking about structures that are non-dilutive and equitable. So that's what I would hope that we can build together.
But then we wouldn't have Facebook if we didn't dilute stock. Thank you so much for those brilliant insights, as always, Smitha. We appreciate your leadership, your guidance, your partnership, just everything. Thank you for bringing your whole self to these conversations. We're going to move on to Brian. Go ahead, my friend. Any actionable insights or just a call to action to community? And Melissa in the chat nailed it, by the way. So I don't know if you want to read what Melissa shared.
Yeah, I mean, I definitely repeat what Melissa shared, that investors look more emerging managers, like myself, like Melissa, like Lee's, and especially, private organizations, government, pensions, look at investing in emerging managers to do that. So 100% echo what Melissa's saying. My additional call to action would be, social organizations looking to invest out there, keep your statistics and look at your statistics and keep asking yourself your question, why doesn't my investment reflect the community in Canada, right? If you're not measuring it, you're not doing it, right? And if you're not saying, oh, we don't have anyone that we've invested to in Black organizations or Black venture funds, we haven't done any Indigenous, we haven't done any Middle Eastern, then you need to be saying it's out there, right? Don't assume it's not out there. Keep going and asking and make sure you're working to those numbers. So to me, that would be my call to action, measure what you're doing and then act upon it.
Absolutely. And look at who's on your investment committee. So I agree completely. Thank you so much for your brilliance as always, Brian. And we're going to go off to our colleague Adam next. Call to action.
Thanks, Victor. And thanks for the opportunity to participate. I'd say a call to action would be maybe to move beyond single point to systemic approaches. So when we think about looking at how we engage, we need to center equity. We need to find means by which we intersect with one another across points. And also find ways to collaborate across sectors. Then from a a broader thematic perspective of how we build the ecosystem, it's not just about capital, but how are we building capacity? How are we building intermediaries? How are we mobilizing capital and putting the enabling policy and other infrastructure in place so we can be successful? So that'd be my call to action.
Thank you so much for your leadership, Adam, and your participation today and all the work that you're doing. We appreciate you. And last but not least, Jeff, your call to action, your our closer tonight, Jimmy Keys or Tom Henke. It's going back. My dad raised me on Blue Jays, you know. You're our closer. What's your call to action, my friend?
So much pressure. Yeah, I think, I mean, all the brilliant words of the other panelists, you know, I of course support that and double down on all that. And I would have to say is challenge and pressure. Challenge what people say when they can't invest. Pressure on your banks, your financial institutions, your pension funds, your organization that's an asset holder to do things differently and look to invest in, you know, for lack of a better word, you know, alternative financing vehicles, alternative financing managers, and put lots of pressure on people because they end up responding to it. I mean, ESG exists out of, you know, it's a negative risk screen, but hey, it exists out of pressure put on by people. When you have things like pension funds, like you mentioned in the beginning, doing crazy things like investing in FTX, you know, kind of mercurial exchange, they could have easily put $90 million into something way more thoughtful than that, as opposed to playing in cryptocurrency land. It would, you know, go ahead, put $20 million into SVX and see what the change that you can make, or put $30 million into, you know, a black tech fund and see exactly what you can get out of it. So I think it's up to us to put pressure and also put pressure on government to support that. I mean, these are often very, very risk averse investment committees. And this is where government can be catalytic and kind of come into play with regulations and policies. So challenge and pressure.
I love that. I love that. And I'm seeing some plus ones from Melissa and many others. So challenge and pressure, and absolutely power concedes to nothing, never has, never will. Our honorable ancestor Frederick Douglass said that. So challenge and pressure is a powerful mantra. There's a question in the chat from our colleague Unish from Algoma University. Good to see you, my friend. How do we move more mainstream institutions toward ethical investing for it to not become the default? Every major Canadian bank has ethical investment options, yet their investments in the carbon economy dwarfs any ethical initiatives. And he also added a link in the chat. Thank you for that remarkable question. Is there anyone that wants to come off mute in terms of the panelists to address Ushna's question?
I mean, I'll jump in on that one specifically, and I'll go back to the answer I gave before. Organizations like banks need to be more transparent in where they're putting their dollars, right? So if they're saying that, you know, we want to be supporting the, you know, specifically here, the carbon economy, yet they're not measuring that and they're not publicizing what they're doing in that area, it's not going to happen, right? So, I mean, that would be a first step. To me, as, you know, customers of these banks and organizations, going back to exactly what Jeff said, we've got to put challenge and pressure on them that's what we need to see, right? If you're not doing that as my bank, then that's not the bank that I should be with, right? So, you know, start looking around there. So I think we forget sometimes that we as consumers have a lot of power and capability. And we need to come to the table and put pressure back on these organizations to say, this is what we want to see you doing. Right. So that would be my answer on that question.
Great response. Thank you so much for those actionable insights, Brian. Any other panelists want to address that question?
I might just add that in addition to the public pressure on these institutions, there is a role for government. And so we might have seen last week, the Labor Department in the US had new rulings to say that pension funds specifically should be considering ESG factors in risk factors, including climate risk. And so there is a role for policy to set the standards. I think that policy, from our perspective, we signed a letter with the Impact Investing Network to really think about it a little bit more, intentionality around how you measure the risks and the climate risk. But at the very least, I think this has been a good step forward from the perspective of policy around ERISA legislation, particularly in the US, and how it can incorporate ESG and climate risk. And so to the extent that we can bring something similar in the Canadian context to push these mainstream institutions to think about it in a more rigorous way, I think that would be, that would be also really effective, in addition to the bottoms up approach that Brian talked about.
Absolutely, absolutely. Any other panelists want to weigh in on the question? So I'll weigh in quickly, just in terms of just divestment campaigns. A lot of times we forget the power of movement building and movements. When my brother Jonas Hassan from the Justice Fund pulled up a huge truck in downtown Toronto that said philanthropy in Canada is hoarding $85 billion, that got people's attention, especially in the midst of disbursement quota. When my brother Liban Abakar and Rebecca Durant and Dr. Joseph Smith put out the unfunded reports and used data to press folks, that was about movement building. That was an approach. So I think a lot of times we forget, and that's what the name of this conference is. It's the People's Summit. It's the People's Conference on Social Impact. So we should be challenging financial institutions, and if they're not willing to meet the needs of the people, then we need to mobilize and organize like we always have, and develop divestment campaigns. We will leave your institutions by the thousands, or by the hundreds at first, then the thousands, and maybe more, if you're not willing to divest from some of your practices. And I know it sounds like hard work, but guess what? The alternative is even harder. It's a planet that's unlivable. It's economies that are unbearable. So I really believe in movement building. So that's my response. Adam, I saw you had your hand up, or you came off mute.
Yeah, just real quick. I mean, I think one is a bit of a plug. I know someone from Propel Impact was on. I think kind of training and educating the next generation of those that are working in these institutions is critically important, providing with the skills and tools, because they're going to be transforming the culture of these entities. And then doing that as well with those that are already inside. I think some questions they often have is, how do I create this product? How do I advise my clients? Where is it? So how can we convince and a bit change the culture so that portfolio managers, the advisors, the kind of executives of these institutions have a clear path and know that it's entirely possible to be able to transform their institutions from kind of old economy to kind of more just economy business. And then anytime you go into your bank, your credit union, talk to your advisor, ask them, every time they, send you an email, say, where are my ethical options? What's the carbon intensity of the investment? Everyone here can do that. And the more of us that do that, the greater kind of the level of change, because that goes right up to kind of other parts of the institution.
Absolutely. I couldn't agree more as well. I'm seeing our colleague in the chat, Melissa, mentioned family offices are even more or just as elusive. The difference is when they have no choice but to start paying attention. Example, I have a meeting coming up, tried to get a hold of them for a year. Now they're seeking to invest. And that's ridiculous, because the League of Innovators has been investing in entrepreneurs, and your profile is tremendous and enormous. So they should actually be seeking you as opposed to they should be courting you as to vice versa. So I agree completely. I'm seeing another question in the chats. What are the counter narratives for media, prevailing social commentary, and more? As an example, a lot is being said about crypto at the moment, but there is a lot of problematic in traditional investing and other policies that are not scrutinized, considered to the extent of alternatives like community-centric fundraising, or what this panel has spoken about. What's the challenge and pressure on what are the key messages? I think we can go to what Elder Acbn on the When Elders Speak panel spoke yesterday. Elder Acbn is a co-founder of Banker Ladies with Dr. Carolyn Shanez Hussein, a remarkable documentary. If one of my colleagues can put the link in the chat, that'd be great. A Banker Ladies speaks to box hands, partners, Kigalis, Susus, Hagbaz, Isusus, and right now they have a Susu in Ontario that circulates $60K a month, which is remarkable work from some Black women. My mother was a Susu banker for 39 years. So a lot of times we think that we have to Like there can be a balance in terms of navigating institutional capital, and we need to engage institutional investors and making sure that Black, Indigenous, racialized communities are seen as safe harbors for capital. But we also need to find ways and means to validate the informal and find other ways of raising capital that may be more democratic, like the Boston Yojima folks. If anyone's familiar with Boston Yojima, their model is absolutely remarkable. And this is grassroots and still scalable and is replicating. So we'll leave that one alone. We have 2 minutes left, folks. So what we're gonna do right now is just I am statements for the panelists. And it's a simple practice that we always do at SETC, and it's just your how you're feeling in the moment. And I'll start. I am grateful. I'm full of gratitude to all of you for your leadership, your diligence, your wisdom, and your participation. I'm going to hand it off to my remarkable colleague, Jaleesa. Go ahead.
I'm feeling fired up. The last thing that came into my mind as I'm hearing everyone speak is just remembering my quick story about being a parent. So my child's school bus was running late to picking up the children 45 minutes every day. And that there was a problem. And so as each individual parent came to address their issue, as a union, we were able to solve the problem. So that's just my word out to each individual community member, remembering that it's not just the bigger organizations that can make things happen, but you as an individual also has the opportunity to.
Ashe, thank you so much. We're gonna go to Adam. Adam, I am statements.
I'm thankful. Just really appreciate the opportunity to hang out and chat and work with folks like you. So say that, pass it back.
Thank you so much, Adam. We're going to go to our colleague, Smitha.
I'm also feeling, I'm feeling honored to be here, honestly. I feel like sometimes it's hard to balance the US and Canadian markets, and I really want to commit myself to work more deeply with everyone on this call to bring some of our resources and expertise to the Canadian context. So that's kind of a commitment. And honored that you brought me into this conversation, Victor.
Thank you. We appreciate you, Smitha. We're going to go to Jeff. I am statements.
I am. Humbled. I'm humbled by all of you and the work that you do to lift up your communities. And you kind of inspired me to keep going. I was unsure on Saturday morning how I felt about jumping on a call, Victor. I gotta be honest. Got off a plane last night, so this morning I'm like, anyways. But
I was looking for a WhatsApp. I was like, Jeff, don't send me no last minute WhatsApp message.
But just lots of love to all of you for all your work, and I know behind the scenes you're supporting our work too, as we're doing with you, and so I think that's amazing, and happy to connect. A couple people have connected on the chat here. Happy to connect with anybody and share our experience for what it's worth. And Smitha, we're expanding. We've been investing in the US, so we should talk about that because it looks and feels different on a certain front. So Chimagwich, everyone, and thanks for your time.
Thank you. We're gonna go to Brian. I am statements.
I'm echoing Jeff. I'm humbled and grateful, part to be in this great community. Thankful to you, Victor, for inviting me to be here and be with everyone. And being an early Saturday morning, wasn't sure do I want to do this, right? Given I'm still responding to that capital initiative, but I'm grateful for being here. So thank you.
And last but not least, we're going to go to our colleague, Robin Weisner.
Yeah, I have to echo so many of the words that I've heard, but the ones that I'm holding are about being overwhelmed by everything that that you are all doing, those panelists, but also the people who have joined us this morning. I know they're also doing great things. So it's like overwhelmed, overly impressed, and totally inspired. So great way to start a Saturday morning. I'm going to work on my Christmas decorations after this. So I'm going to carry that into that.
Great day. So we want to end this session the same way we began, by acknowledging our ancestors, the original stewards of the various lands we're on. We acknowledge all those who toiled without compassion or compensation, and many forms of racism. We acknowledge all our elders and all our community stalwarts whose shoulders we stand on as we build, share, and learn together for our collective liberation and sovereignty. Have a remarkable day, folks. One love.